Okay, I'd like to welcome you to our webinar where we're going to give our forecast for 2020. Naturally, we're going to review a little bit about what we said last year and update them. And then we will take some questions and answers. And we're then going to be followed by our sponsor, Wonderfilm, which is a company that we're quite excited about. It's a company that we've invested in and now are working for. So it's something that we think is a potential 10-bagger, and we'll discuss that a little bit later and have a presentation by the president of the company. For those of you that have attended our events in person, either in New York or in Hong Kong, we try to do 4 things. Here we're only going to be able to do 2 of them. One, of course, is that we're going to give you some opportunities for investments and areas of investments, especially sectors, that we think will outperform. And then an informative talk, which in this case will be me, and I hope you'll enjoy what I have to say. I tend to agree with almost everything I say. And the other 2 parts, which is giving lots of food and beverage, we unfortunately are not able to do that, but perhaps in 20, 30 years we'll be able to virtually send you some good drinks. And networking opportunities, again, are a little bit limited here. But we will work on that for next year. For those who remember 2018, markets were a little bit like they are now. They effectively were a little bit too high, and we were concerned about it, as were many other people. Then we got into 2019, and there was concern that the markets would be hit hard. And as those of you remember, that certainly was the case in May. Whoop! I've got to shut off my phone. Whoop! Excuse me, folks. Okay, sorry. Whoop. Excuse me one moment. Got to shut this all off, sorry. Okay. So 2020 is a bit of uncertainty. In fact, you might say it's a little bit like 2019 in some ways. That is to say, we don't want to look down because it's way down there. And it's a little bit like 2019, which is there's some potential issues. So what about 2020? What do we have to say about it? Well, normally speaking, we take an audience participation, but I haven't really set that up here. But effectively, there'll be those of you that may think the market has gone as high as it can go, which is not quite our view. Oil may be a little bit higher than it is currently. Gold and Bitcoin. We're not going to take your views, but we will give ours here. What is the big picture? The big new picture is debt defaults. They're high in 2020. They're higher in 2021. When we made our long-term forecasts in 2010, or 2009, and we were calling the Great Recession, which we did to the month, we said that the U.S. would remain that way until about 2015. Actually, we felt it happened until 2016. And when we were showing 1% growth, in our view, that was simply an understating inflation. Effectively, we were nowhere. We also said at the time that in 2019, people would talk about recession, but there wouldn't be one. Whereas in 2021, there was a good chance of it. So number one, we have to look at debt and bond instruments. The U.S.-China trade war is medium risk. Short term, everything is going to be fine. But whether it really is serious and lasts, that's another issue. There are potential financial market upheavals, obviously. These can happen from everything from the Mideast, and we have a potential oil shock we'll talk about, emerging market risks, debt defaults, and lots of swan events, especially in the Indo-Pakistani region. And of course, the U.S. presidential election is something else we have to consider. Will markets be challenged in 2020? We think most definitely, and there are certainly 1 to 2 times. One is happening well before the election, and one may be happening shorter term. So we do expect a minimum of 1 correction and possibly 2 this year. We'd like 2 because then we could trade it, but we'll accept 1. What areas are we interested in? There are 4. One new area we've added is entertainment. And the reason for this is whether you believe the markets are going to 30,000 Dow or whether you think they're going to 20,000 Dow, entertainment will do well, as they did during the Depression. Commodities, certain select commodities will do well in certain scenarios. And then selective healthcare and technology. Now, obviously with certain scenarios, the healthcare will not do well, but certain ones will. Anything that gives you better results and lower cost. And in technology, and I think in the summer there's going to be a big hit, if not before, to the NASDAQ, small, undervalued companies that are scalable and near profitability can do very well. And naturally, if you want to actively trade and hedge, you can do as well. So the big picture basically is okay, but with lots of risk. Let's drill down a little bit. Some of you, or many of you, may like Trump or may not like Trump, but it doesn't matter if you do. But we do know that it's not wise to fight the Fed. And when you do, it can be expensive, and you need deep pockets. So the same thing has been one of our themes for the last few years: why fight Trump? Trump has 4 basic goals, and like all presidents, he wants the market up for his election. He wants the stock market higher, and it's higher. He wanted interest rates lower, and they're certainly lower. He wanted the dollar weaker, and the dollar is somewhat weaker at the moment. Not going to be terribly weak, but it's weaker. And this is the interesting one. He wants oil lower, and generally speaking, oil's been lower, but at the moment we're over 60. And we'll talk about that because it will definitely go down seasonally into the election. No president wants to have a high oil price in November. But because of the IPO in Saudi Arabia, and for some other reasons, oil's above 60 now. And we'll talk about its range. But it's an interesting play. In fact, it's a very interesting contrarian play because a few months ago, due to SRI investing and activist investing, oil was being poo-pooed dramatically. And so you had a lot of funds, ESG funds, leaving them. Now, that made an opportunity with oil up and energy up that there's some interesting trades there. So what is Trump's horoscope in 2020? It's generally challenging, but it's also excellent for making deals. There's going to be a fair amount of uncertainty, and he's likely to achieve more of what he wants. Plus, he has a good horoscope for the 2020 election. Most of you know we predicted his forecast 14 to 16 months in advance that he would win the 2016, but that was a no-brainer because he had an A+ horoscope. He has a good horoscope for 2020, but not as strong. So it will depend to some extent on who is his challenge. But basically, given where markets are, given where his horoscope, he's likely to win. But we can't say it as strongly as we did in 2016. But the odds favor him, and so do the bookies. Periodically, we sell and protect markets. We did it earlier when we went to just above 3,000, and we're recommending it very strongly now. We entered into some shorts again this current week, and we're relatively short, and we're recommending maximum cash allocation. We think there's a possibility that the markets in the next 2 months may be going down, but we have to wait and see. It's less certain than what we have to say about the second half of the year, which is very certain. The big problem is debt crisis. You're going to see that in China. You're going to see that in Third World. You're going to see that in other places as well. Geopolitical uncertainty will reign. U.S. presidential election, China, India, and Pakistan. So what can we say with certainty? We mentioned for the last 2 years about May 2019 be short immediately from the beginning of May, and you know what happened. We also said if you weren't a trader, don't worry about it because the markets would be higher from October on, which they were. But we do suggest end of May, not the beginning of May, to start reducing, but August is our red month, especially potentially NASDAQ. So we could see the 10% drop there. So we're not as concerned for the first part of the year, but we were definitely concerned in August. And if we leave astrology aside for the moment, depending on who is elected and nominated on the Democratic side in July, certain people will scare the markets. But if the election is anywhere near close, then uncertainty is going to reign. Many people will reduce their holdings. Astrologically, that's backed up. So for fundamental and astrological reasons, you want to be very concerned and prepared for August and not necessarily wait for the last minute. Our strategies were 5 in 2019, and we give ourselves 80%, which is a B. The one call we had that did not work out, although it was profitable but subpar, was to be long copper in the second half of the year. We expected copper to retake the 320 level. It's currently at 282, starting the year at 263. So while it made some money for us, and we'll talk about that, it certainly was not a home run grand slam that we were hoping for, and it did underperform many of its benchmarks. So rather than being wrong, we want to say we were early, and we are basically putting copper in again and holding them. Both, whether you did it in physical copper or whether you do it in an index like the COPX. Selective shorts and pairs, home run, grand slam, double sell in May and go away, and that was a home run. Couldn't have been better. To the top of the day, we gave that. Having income did well, whether you did royalties and streaming, which we liked, or you did very conservative things like the NOBL. Basically, they performed adequately. Reduced risk and was market perform, which is what it was meant to do. The wealth exchange about China is very obvious. Many people today are not global businesses are diversifying outside of China except for internal China. India, to some extent, has benefited, but that's going to be changing. It has changed. But other places, whether it be Vietnam or the Philippines, Indonesia, perhaps Thailand, Japan, Korea, all these places benefited from the new movements. Mexico. China's economy, no matter what, will be slowing next year. That is to say, in 2020. In the good scenario, they deal with it well, and they come out in 2021 positively. In the bad scenario, they fight the U.S. and slow down and become more isolated. There is an aspect that's similar to 1947. It's the Saturn-Pluto aspects, which to some extent was the start of the Cold War with Russia. That is currently also happening, and there is that potential with China that we could have a long-term Cold War. I hope that's not the case. It doesn't need to be the case, but it is a possibility. Then special situations, we had quite a number of them, most of which were successful, a few of which blew up on us. But we had healthcare, and which we again like, lower prices, better outcome. Commodities did well, and the entertainment is something we've recently added, and now we're also adding some technology. Bitcoin we don't have to deal with. It clearly is not going to 1 million as some people thought. The one prediction we made was on Libra, which was a loser from day one, and you can see it's gone nowhere. When everyone was talking how it was going to take over the world, we looked at its horoscope. It was horrible, and this is a case of a perfect astrological forecast that the Libra conception horoscope was horrible. But the main thing I want you to think about when you think about crypto, not blockchain, but crypto, it's delusional to believe that the powers that be will allow money laundering, tax evasion, terrorist financing, or serious competition. So realize that isn't going to happen. And I think people will realize that next year. We did get the top to the day On Bitcoin, we played it somewhat technically, but it's so manipulating the market that it's nothing we're trading. If for some reason it does go up, we'll give you the next top, but we think it's just a loser, and hopefully we won't even mention it next year. Gold. Gold has done very well. We plan to stay long gold in 2020. Periodically, we did recommend some shorting of it when it was like 1550 before. Gold currently is in a seasonal time frame till about February, so we wouldn't do anything, but after February, we're likely to do it short on it, and silver especially. We're going to talk about that. But we get an A+ for gold. The buying the February gold last year, selling June, and buying December was A+. This year, we see gold and silver doing well in the fall and post-U.S. election, which is an interesting comment. It will do very, very well November, December. But if we take silver, for example, we plan to be short the March-April time frame and then buy it for the fall. So there's a very good silver trade in there. We like silver, not as much as gold, since I'm a Leo. But there is a definite trade there that's equivalent to last year's sell June gold to sell March-April silver. We'd like to be selling it from higher numbers, of course. Gold, in my viewpoint, is worth $14.22, going to $14.25, and here we are above $1,500. It's overpriced. But for many years, the last 2-3 years, gold was underpriced, and there's no reason why it can't be over fair value, certainly for the next year. It is cheap geopolitical crisis insurance, and there will be some crises. The important thing is there are people who cannot or will not buy the U.S. currency, and there are those who want to safely and cheaply hedge the U.S. dollar exposure. And for that, gold is only as good as gold. But there's something brand new, and that is some investors today are now hedging record equity prices by buying gold because generalists are beginning to come into the market, which is one of the reasons it's overvalued. So we're going to be seeing more and more of that. It will not be the barbaric relic, but more portfolios will be exposed to this over the year, and that's positive for gold and gold equities. The trading range is approximately 1,400 to 1,600, and silver valuation is about 16 to 18, 19. Again, we can go outside these range, but this is what we have. And again, the basic point is the sea change now is more generalists are adding gold to their portfolio, and you want to follow the money there. So this is where we would normally take a break if we're doing a live conference, but we have more material to cover going forward now. Key dates. We just had an eclipse on the 26th, and this is something that's quite positive for the United States. And then we have a Saturn-Pluto cycle coming, which is where the debt issues become important again. The next element is going to be the Jupiter-Saturn, which we're going to talk about at the end of the year. There are a lot of events, but there are big changes coming. The astrology. Trump, 2020, challenging, often unclear, but generally positive, i.e. the way to bet. U.S. markets are good for trading, but risky at times. You want to again reduce by May 2020, and you must be protected in August or not be very happy. Now, if you didn't care what happened in May and didn't do anything, then, okay, don't do anything in August, but there's risk. And there's risk the year after. I definitely suggest protection, certainly if you have a lot of NASDAQ exposure. So that's a big point. We're a little bit less clear earlier in the year, but we're very clear about the summer. Gold and silver will do very well seasonally and astrologically this fall and post-November. And again, we've mentioned silver before. Oil, should do well in the spring. It is seasonally good in the summer, but in 2020 in June there are some risks, perhaps in the Middle East. There's some terrorist issues that I would not want to be short oil in June, give or take, beginning or end of May, beginning of July. You don't want to be short oil then. There are some issues there. Positive if you're owning oil stocks, negative if you're short. So oil comes back on the radar, even though as an ESG phenomena, it's negative. Bitcoin is all influenced by outside views of what the government make legal or not, but it's such a joke. I will put up the slides that we did previously. There's no need to update them, but you can see lots of reasons why it's not a place to be. China was under Saturn, which means challenge, it means reality, and that continues in 2020, and debt issues, very strong. Although, if it plays well, it can do well in 2020. Hong Kong, which was the last time we gave this particular talk, will be less violent, at least from an astrological viewpoint. We certainly hope so, since we want to be there in the spring. But it's very destructive to the country. But we did talk about it a year ago when we were in Hong Kong before it started, that it was going to be a very Martian war-like phenomena, which has been the case. The impetus will be over or reduced. Hopefully nothing else happens there. Big changes in 2020. The Jupiter-Saturn is a 20-year cycle, and when we're talking about 2021, the markets and the global geopolitical scene will be very different. Certainly in the United States, whether if Trump is reelected and the Democrats lose and the Republicans come in, that's one scenario, and the reverse is another. But certainly a different scenario. And if you're Chinese, there's a new 12-year cycle. So there are new things happening from an astrological viewpoint. It's a year of the middle rat, new beginnings, but the most important thing is initiatives will only be successful if they're carefully planned. In other words, once we start January 25th on, from a Chinese viewpoint, don't wing it, plan, plan, plan. And of course, we always take a Swiss level of being conservative. Indian astrology, and there are different schools of Indian astrology, we won't go into all of them. One of them, which one of my subscribers sent me, talked about until November 24th being like the Roaring 20s. And then, of course, then they talked about from July on, the writing is on the wall, interestingly enough, when the Democratic nomination takes place, and then ahead to safety. They're allowing for Dow to go as high as 30,000. It's a common phenomena. Right now, we'll talk about numbers in a second. But regardless, 2021 is certainly likely to start on a down foot to some extent. If Trump comes in, there'll still be some selling, but not as much. If the Democrats come in, depending on who, there could be a tremendous amount of selling for obvious reasons. These valuations change periodically. These are just current valuations. The dollar is currently valued. The CNY, the Chinese yuan, is very important to track. We track two things when you want to be trading. One is the U.S. bonds, roughly around 128 to 129 range. And then the Chinese, we're at 698, 699. That means everything's fine between the U.S. and China. We got as high as 718. When you're over 708, you have to watch because they're fighting. 703 is okay. But as long as the Chinese situation's here, you don't have to worry what U.S. and China is doing. If it goes higher, then you know there's trouble in the U.S.-China situation, and that means trouble in the markets. Silver's got a very wide range, obviously. Bonds are okay, and oil's rough range is 58 to 62. Could go as high as 66. Could go as little as 54, but basically above 62, we want to be sort of on the short side at the right times. Under 58, certainly under 54, we want to consider buying it. Everything else we consider mispriced. Dow is too high. S&P is too high. 3150 being a very important part for the S&Ps. NASDAQ is too high. Is 9,000 the end, or do we go to 10,000? Are we like NASDAQ 4,000? which we initially thought could be a top, but we had a quick run to 5,000. That remains to be seen. Tips, inflation, protected bonds may have some value. Copper, again, we think is ridiculously priced. Bitcoin is somewhat worthless. Gold is too expensive, but we won't short it here. And the VIX, too common. Certainly, for the time of when we look at oil, when we may see some oil shocks, we'll be long the VIX, and certainly will be potentially long for August. So we'll keep those valuations there. Technicals, obviously the Dow at 28,000 when it's above. If you're bullish, you don't care. If 28,000 becomes the ceiling, then you want to be concerned and do things if you haven't done them. S&P 3150 is the key number. Above it, again, bulls are happy. Below it, bulls are less happy. And we are certainly at the range near what most sensible analysts think valuation belongs. Dow 9,000, 10,000, that remains to be seen. Very well could stay here for a while, and we could certainly go to 8,000 before hitting 10,000. Gold's in a trading range. 1480 is the new support. 1440 to 1450 is held. Once we get to the highs again, we'll probably be on the short side in the first half of the year, but not in the second half of the year when we're very bullish in the fall and post-election. So again, timing is extremely important. Oil 60 pivot is obvious. When we get 66 or more, depending on when we might want to short it. Copper is just an accumulate, but it's a multi-year accumulate. So if you're a fast trader, copper's not the place. U.S. bonds, you've got to watch, just like you have to watch the Chinese yuan. Those are the two things here you watch. And if it's over 7-8, then things are not going well between the U.S. and China. Bitcoin is junk. Trading hedges, we've given you this before. We again went short today, again around 32.30, but we have lots of shorts we're still holding. Most of what we've closed already here, and that did pretty well. We'll be giving you the new shorts as we go along. But we hit one today. We'll see how the first and second day goes of the new year. Certainly it could be down, and if it's sensibly down. So we're watching a bunch of things as well. We're watching the VIX. We're watching tips. The two canaries in the coal mine we've talked about, the U.S. bonds and the Chinese yuan. And then there's some shorts we don't like. That is to say, we think Netflix, considering the competition it has, is not a winner. We know they're doing better in Europe. We know they're doing better in Asia, but it's just a joke. And we'll talk about that when we introduce our Wonder film. And Tesla, of course, is a joke, too. They just opened up their Chinese factory, but we think the competition will be coming in 2022 more than 2020 or 2021, but it depends on what you're playing. So these are the things we're watching, and if you're a subscriber to our newsletter, you'll be seeing that. So we posted on our Twitter feed on Friday that with the markets being where they were, rather than entering in fresh money, we suggested either cashing out or raising cash. I spoke to one of my clients who was up 18–20%, not an active client of ours, but a friend, very happy. And my advice, since they were comfortable with what they had, although it did underperform a little bit, I said, with their new IRA money, leave it in cash for a correction. And a lot of people have that feeling as well. So I'm not saying you have to cash out here, although I'm not against that. But, and we ourselves have maximum for us in different portfolios cash. But the fresh cash you're putting into the market in your IRAs or et cetera, I would suggest leaving it in cash. And after the first or second correction, put it to work. Again, that's conservative. It's dangerous to fight the Fed. The market above 28,000, above NASDAQ 8,800, and above 3,200 is, to me, trees growing to the skies. Doesn't mean they can't go further. Doesn't mean we won't have 30,000 Dow. It doesn't mean we won't have 10,000 NASDAQ or even 36 or 34 S&P, but the risk level is unacceptable. So at these levels, we recommend higher cash exposure, writing calls, and some long-short hedging. So the summary, be selective again. Stock picking, I think, will outperform index. We like stocks and hedging, raising cash, writing calls, on sleep. This is not an easy market to forecast because it's so based on tweets, so based on U.S. and China, so based on a number of swan events that are possible. So once again, investors need a longer-term horizon, traders a shorter one. Maximum allocation for base metals, precious metals, although base metals are mostly copper. Stock selection is important, and you always do well with stocks having strong cash flows, sound balance sheets, and growing dividends, which certainly you want to own those in August if there is a strong correction and you don't want to sell it. The market has gone too high, so what are our strategies? So we're going to summarize them again, and then we'll take some questions and introduce our company. Number one, we're taking copper, although a little bit less bullish than last time. We like some private equity, but remember, private equity not like WeWorks, private equity that's realistic. We are underweight China and India is under Mars influence, and it's very aggressive with their situation, with what Modi is doing, and we would suggest being underweight both of these for potentially in the future catching them. High quality income, always recommended. And if you want long short pairs, then you can do something like buy Disney and sell Netflix. Why Netflix? Because it's got so much competition, it's absurd. Over 30 people are doing it, so while they will grow their business, they will be forced to spend more money, lower their prices. And if you're aggressive, which I tend to be, you can look at our Wonder Film, which we're discussing. That's a very, very aggressive play. We're talking 8-cent stock, so it's something that we'll talk about in a moment, and you could sell Netflix with it, or you could buy it or not. In fact, everyone should buy at least 100 shares and put it on their screen. If you have real money, buy 100,000 shares. But effectively, put it on. This is one of our home run grand slams. Again, we like royalties. Cash is always doing well. Precious metals, wind and solar, even music. We like the natural resources. We like selective healthcare, technology, and special situations. And entertainment is a company we're working for now. There are many reasons that it will do well. It's a de-risk situation. Some of you may have participated in the past in films and probably lost money, or in slates, lost money. They have a very interesting scenario where they don't lose money, which is the most important part of investing. So I think we're going to be ready in a moment. We'd like to make more money with less risk. Using astrology and technicals, we're there first. With investing in we do astrology and fundamentals. We have our conferences coming up for those of you that are fund managers and professionals. The next one is May 12th. And we're going to take some questions in a moment. So let me get my thing going. I would like to welcome Kurt Shaw.
Okay, thank you, Henry. I'm excited to be here today to discuss about Wonder Film and its vision and business plan for 2020. I believe that this is an incredible opportunity. Wonder Film is in the content delivery business in the entertainment industry. So let's go through the deck as I explain the story and the business opportunity to you. So I flip through here. So our core business is the creation of IP, and so we are in the business of either getting book rights, scripts, story ideas from a newspaper article or from something. We develop that IP into a script. We then add a director, and then we go out and add cast. And we add cast that are worth something in the world. So our last 3 movies would have been a movie with Nick Cage, a movie with John Travolta, and a movie with Guy Pearce. So these cast have value. So as we're developing the IP, we sort of have an idea who the cast is, and we attach them, and while we're attaching the cast, we're in the business of trying to pre-sell the movie. So pre-selling in the US and pre-selling around the world. So that's our core business, is sort of packaging movies and pre-selling them. So I move along. So by pre-selling the movies, we reduce the risk so that most of our movies have zero risk because we've covered the budget by pre-selling it. We're also now delivering movies to all these streaming services. Everybody's heard of Netflix. They've heard of Amazon. Well, now Disney has a Disney Plus channel. Hulu, Walmart, Apple have got into the business. There's actually 400 companies that are in the streaming business today. They all need content. And so it's the right time. In my 20-year career, I've never seen a demand for content. I can sell as much content as I can afford to finance and make. We have very strong relationships in the industry, and we have a big, strong management team. So as I move to that, there's myself. I've produced over 230 movies, including The Hurt Locker, which won an Oscar. There's Dan Grodnick, who's produced over 50 movies, and Jeff Bowler. And I call the three of us, as well as another member, as sort of base hitters. Our movies are not going to go into theaters. They're not meant to make home run films. They're really just meant to be what I call base hits. They're budgeted anywhere from $500,000 to $10 million, and they're all cast driven. They're safe. We pre-sell every movie. We only make the movie for how much we can sell it for, and there's no risk. It's a really simple model. Then we added last spring producers Sean Reddick and Yvette Yates, which are a producing team, and I call them our home run hitters for the company. Their last two movies were Black Klansman and Get Out. Black Klansman did over $100 million, Get Out did over $400 million, and these are the main producers. You know, Sean got the rights to the book on Black Klansman. Sean hired the writers. He hired Spike Lee. He arranged the distribution with Universal, and so they've joined our team, and I call them the home run hitters, which is where we'll get the big upside from. When we added them last spring, I thought our stock would go up 25%, but it actually fell 25%. So the current value of the company gives no value to the fact that Sean's on the team and that we're going to be producing 3 movies with Sean in the next year. Those movies, the first movie will get out next October. And they're movies that, his movies are the type of movies that will do over $100 million. Get Out only had $6.5 million in cost for the budget, and it did over $400 million. Black Klansman cost $15 million, it's done over $100 million. So we have no value for these guys, but I'm excited to get their new product launched. Here's their movies, Hurt Locker.
Kurt, if you had one of those movies, that would be worth over $1 a share in profit.
That's correct, you're absolutely right. We had one of these movies that would be worth over $1 a share for profit. I was The Hurt Locker, the National Lampoon Christmas Vacation is one of Dan's movies, and I was always jealous that he got to do the Bobby Kennedy movie. But the company is really poised to take off. We switch over here now. I'm going to the streaming business. So content has always been referred to as content as king, but today more than ever, the streaming business is one of the fastest growing businesses in the United States today. With all of these new channels coming on board, the revenue is growing, the attention is growing, the whole entertainment industry is changing its business model to work with this streaming video business. And the next wave hasn't even come yet, which is going to be called AVOD, which is advertising video on demand. That's the next wave of broadcasters that will also need content. So we deliver content to the broadcasters that are in huge demand for new content. So once again, I just want to go through our core business thing. We acquire and develop content, we pre-sell it, then it gets released, we use tax credits to our advantage, and produce these films. So we already have $50 million of production to make in the year 2020, so it's, again, we're trading at probably a $4 million value, which is less than 20% of our volume, of our revenue volume in 2019, and it's less than 7% of our revenue volume for 2020. And that doesn't take into effect the potential of a breakout. So the first film that we refer to is Saw. Lionsgate was just a normal little company until it got the Saw franchise. Saw was a movie that was made for $1.2 million. It made over $100 million in revenue when it was first released. That established Lionsgate as one of the bigger distributors in the U.S. today. They then did Saw 2, Saw 3, Saw 4, all the way to Saw 10. Every October, Lionsgate released a new Saw movie, and every October it got this influx of significant cash, and it built the business into a television business, a bigger theatrical business. They managed to buy the Twilight assets for another IP that was very valuable, and it just takes one film for our stock to hit a buck, for our company to become one of the majors in the United States today. And we just look at Black Klansman and Get Out. We have the guy that produced those two movies with our team, and that's his last two movies. And both of them won Oscars. And what I'm most proud of is they won Oscars for script. Black Klansman was the best adaptation, and Get Out was the best original script. And Sean is the producer that got the IP and developed those scripts. So we're super excited about his involvement and potential. As I referred to, we have over $50 million in production. One of the key parts of our company is the ability to cast and get access to cast. So our last three movies, as I said, were released. We have a John Travolta movie, a Nick Cage and Guy Pearce. We also have coming out shortly a Ryan Phillips, Steven Seagal film was out last month. And so we have, our next 6 movies coming out have similar high level of cast. So in a review, Wonder Film's a company that has press releases every month. There's a lot going on. Here last November, our Nick Cage movie came out. Last September, our Tammy If I Was Dying movie was a premiere at the Toronto Film Festival. We had The Fanatic out with John Travolta. So we have a lot of news and a lot of product coming out. Last May in 2019, we also launched our own foreign sales company called Wonder Film Global, which did $3 million of sales in the first month. We expect it to do $20 million a year, and it will give us a 5% free cash into the parent company from the company. Wonder Film Global's next market is in Berlin in February, and we're launching 3 brand new movies to sell in the world at that time. So, why Wonder Film? We're greatly undervalued. We run a risk-averse production process, which means you're going to make a little bit of money, but if we get a hit, you'll make a lot of money. But your worst position is you make a little bit of money. We're in a business that is soaring with demand for streamers. I had a meeting with Disney recently, and Disney said for the first time in their history, with their new Disney Plus service, that they have to go out to third-party suppliers like ourselves to buy content to fill their channel to meet the demand of their viewers. So we have a great management team with tremendous experience, and we're just an exciting time to be in this industry and to invest with us, and we will grow significantly in the 12 months and 24 months ahead. Thank you very much. Thanks, Henry, and we'll talk to you soon.
Wait, before you go, I just want to make a few comments. And again, we were sorry a little bit for that noise, but I want to point out again that entertainment, regardless if the markets go up to 30,000 Dow or whether the markets drop to 20,000 Dow, that entertainment is one of the sectors you want to be in. This is a very undervalued stock. We basically are invested in it as well as working for the company. We highly recommend that you participate. And thank you all, and everyone have a nice day.
Thanks, Henry.
Okay.